Oops. All right, you should be good, Cliff. I'm so sorry if that was super loud.
Okay. Hello, Bree. I see you on there. Hopefully, we've got the class going here today and the Zoom, so we'll get things started. We'll get everybody a couple more minutes to see if they have time to join today. If not, we'll just go ahead and get started. We'll give about 2 more minutes and then we'll get started. How's your day been?
Good. I work at a couple different other places as well. So
Okay.
I switched gear. I work at the Y, so
Oh,
I
yeah.
switched gears.
North
to
Canton?
those, Myers Lake and
Okay.
the downtown. Y.
Oh,
So,
yeah.
yeah.
Okay.
Yeah.
Yeah. I used to train at the North Canton Y for
Okay.
many, many years. I mean, it
Okay.
literally up until my kids finally stopped going is when we finally just stopped the membership because I was the only one going. I was like,
Yeah.
well, I'll just go to Powerhouse since it's just me.
Yes. Yes.
You know what I mean? So,
Yeah. 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 So I'm just starting the day on this stuff, but.
Okay.
So
Okay.
2 years. I just got licensed. Well, beginning of July. So.
Oh,
So
wow.
new
Congratulations. Oh, great.
Yeah,
Great.
Yeah. Yeah. So starting a new chapter.
Very cool.
Yeah.
Very cool. All right. So it's about 11:02. All right. So we'll just go ahead and get started, everybody. Thank you for everyone that joined this meeting today. I really think it's going to be a great, opportunity just to learn and kind of get a good idea of, the difference between, financial readiness and renting a home versus owning a home. I really just wanted to kind of go over, some of the good topics and everything, just so you guys have an understanding why, it's better for, honestly, overall, it's always better to own than to rent because even in this market, we know where rent is and all those kinds of things and what the cost of everything seems to be. At least, where interest rates are right now, they are going to come down. How low, we don't necessarily know, but at least we know that, you do have the option of possibly refinancing to actually lower your monthly payment when you own something. So that's what's kind of nice. Rent doesn't really ever go back down. Once it's up, it's up. It's going to only go up, from that, never come back down. And so unless you got a landlord that's, I don't know, who knows, a change of ownership or whatever, something like that. But that's very rare. So I just really wanted to go over and discuss today just some of the great things that you can understand and have just some personal information on how to talk to your clients, talk to your buyers, talk to your sellers about, okay, the difference between, especially if you got some buyers that are on the fence and have been renting their whole life. You'd be surprised how many people I've met that have been renting their whole life and never even thought about home ownership or could they afford a home. So lots of good information to kind of, gather and to go over. So real quick, if you can see my screen, let me know, just, unmute or put something in the chat or real quick that says you're good to go that you can see. I think you can, but I just wanted to make sure. Okay, perfect. All right. All right. So first, what I'm going to do is we're just kind of just go over some of the basics between renting a home versus owning a home, like this, the overall overview. So we'll kind of read through this and just kind of follow along here as we go. And all right, so let's start with buying a home definitely is a huge part of the American dream. I mean, obviously, home ownership is just such a big achievement for a lot of people. Just having that sense of ownership, just, that sense of pride, that you've purchased a property that you own and it is yours. And to gain, this all the other aspects with equity and, just those kinds of things and, owning your own property instead of, seeing your payments, going towards your mortgage and actually not just paying somebody else's mortgage. So choosing to buy a home or rent through is a major decision that affects your financial health, lifestyle, and personal goals. So whichever option, people choose depends entirely on your lifestyle and financial situation. Both require a regular income so you can afford to make the payments associated with the costs and may also require a certain degree of effort to maintain. Okay. But there are several differences that make renting and owning a property distinctly different. Renting a property doesn't come with all the responsibilities associated with home ownership, and you have more flexibility as you aren't necessarily tied down to your property. Owning your home gives you the sizable investment, but it does come, at a bigger cost with upfront and over the long run costs. Okay. So owning a home isn't always better than renting. In some cases, renting is not always the best and as simple as it seems either. So here are some highlights of the differences between renting and buying. Now, I focused on these key takeaways when I was kind of going through my paperwork to try to get a couple of things put in because I wanted to kind of go over all of the different benefits for, for both, because obviously people that are renting, it may be just, due to their time in their life right now, where they're maybe trying to save a little bit of money. They're going through credit repair. They don't want any other responsibilities as home ownership, and those kinds of things. But just that overall understanding is just good to kind of know. And so whether you choose to rent or buy your home depends on your financial situation, lifestyle, and personal goals. Both provide you with a place to live and require regular income in order to make the payments. Renting offers flexibility, predictability, monthly expenses, and someone to handle the repairs. So that's kind of like some of the pros of renting. Homeownership brings intangible benefits such as stability, pride of ownership, along with the tangible ones and tax deductions and equity. So those are the other kinds of some of the pros of homeownership. Renting doesn't mean you're throwing away money every month, not necessarily all the time, but owning doesn't always help you build wealth in the long run. So it's really just trying to figure out what your financial goals are, so we have an understanding of that. All right, so we'll discuss renting first. So renting a home. The biggest myth about renting is that you're throwing away money every month. That necessarily isn't true. After all, you need a place to live. So it is helping with your well-being. Okay. And that always costs money one way or another to live, which truly, that's what you're not really doing. So I wanted to kind of be honest and upfront with some of those things. But building equity and monthly rent payments are not all the cost of home ownership. Always go towards building equity. When you rent, you actually are renting. You actually exactly know the housing costs each month. The amount is indicated on your lease, so you plan accordingly. In some cases, the landlord may also include other costs within that amount, such as utilities, storage, HOA fees, if you live in a condominium, or anything like that. As a renter, you may face rent increases each time your lease is up for the renewal, though. So these rent increases can even steeper if you live in certain parts and areas in town. This may not be the case if you live in an area where the rent is ceilings, or at least it has a ceiling, and there's rent control, which limit how much a landlord can increase the rent, if at all. And then renting means you're able to move whenever your lease ends. However, it also means you could have to move suddenly if your landlord decides to sell the property and turns into an apartment complex, or it turns into condos. Less dramatically, they could, just bump up the rent, to the point where you can't afford it. And then you're kind of like, okay, you're stuck. What do I do? That's really been the biggest and the scariest thing, is what I've heard is, and a lot of clients lately that have been renting and saying, people are trying to cash out on some of this equity of these properties and they're selling them. And if the person that they're, is purchasing the property is want to use this as a primary residence, the current tenants, there's nothing they can do. They've got to move out, and so that's really the kind of the scariest part of it all too. When it comes to renting, it's not necessarily, you don't own it. You don't have that say, it's not up to you when you move or not. So that's where it can definitely be scary. All right, so let me scroll up here. Okay. All right, so now we're going to kind of get into here, no, I want to skip this part. This is a pretty good part too. All right, so although not as universal as homeowners insurance, renters insurance is often recommended, and sometimes required by landlords for those leasing homes or apartments. So that's another thing too, is that you're having to cover insurance for a property that you don't own as well. I mean, yes, it could handle your personal items. Rental insurance can help with your personal kinds of belongings, but in regards to the property, you're just paying it for somebody else. So that's why a lot of landlords that I've at least heard and from buyers in their current situation, saying that most of them are starting to require it now. Okay. All right, so now let's get into owning a home. Okay, so home ownership brings both tangible and intangible benefits. Not only do you have your own home, but you can now make decisions and look at the design of the space, and you also get a sense of stability and pride of ownership. So keep in mind, changing your mind about where you're living can be expensive, since real estate is an illiquid asset. So you may not be able to sell when you want, or for what you want. And even if you do, you may not get the price, that you want. So especially if the housing market is down, which right now it's not, housing is up, there are significant transactions costs associated with selling your property. So the overall homeownership tends to be higher than renting, even if your mortgage payment is lower than the rent, just due to some of the expenses. But this is what you do to plan for. So you'll be paying, property taxes, you have, trash pickup, water, sewer, pest control, tree trimming, if applicable. Some of these are just, if you have one, like pool cleaning, homeowners insurance obviously is required. As long as there's a mortgage on the property, you have to carry insurance, things like that. Earthquake insurance in some areas, luckily in Ohio, we don't have to worry about that. So we're all good. And then mortgage interest, we can kind of get into interest rates and things like that. Can make up nearly all of your monthly payments in the early years of the long-term mortgage. Now, really, the biggest thing where this point is, where I'm glad I added this in here, was when it comes to mortgage interest and mortgage term. On a 30-year mortgage, okay, generally the first, I'd say 10 to 13 years is more interest loaded up front. So you're going to see less amount going towards your principal as it does going towards the interest. And that's just because we're taking the term out so long to borrow that money. Okay. But if you shorten the term, like say, for instance, if you're in the financial situation or, position where you can maybe cut it to like a 20-year term or like a 15-year term. Granted, yes, the payment is a little bit higher, but it's night and day the difference on when you see you having your principal reduction as opposed to what's going towards interest. So don't let it scare you totally. I know a 30-year mortgage, because it's dragged out for 30 years. That's why the first 10 or so years of it is more interest loaded, but then you'll start to see the principal reduction come down as you get within, 13, 14 years of that initial mortgage loan. But rates can also be refinanced too, which is a wonderful thing. And so you'll spend about $72,000 in interest for a $100,000 loan at 4% for 30 years. And admittedly, you recoup some of that in tax deductions if you can, use your itemizations and all those kinds of things. And let's not forget repairs, maintenance. Let's be real about certain things too, depending upon the situation in the property and what's going on, the age of appliances and things like that, which can be costly. You will find yourself with an unexpected leak in the roof. Replacing your roof could cost an additional $12,000, which may not be covered on your home insurance policy, depending upon what you got. So, but the biggest thing is when it comes to mortgages and financing, here, we'll just we'll go back to the key differences, is that when a property is appraised, and you're able to tack into your equity. So if you're able to shorten your monthly obligations each month too, which is a good thing. Like say, for instance, you've been in your house for a little while, you wanted to use some of your equity to maybe fix the property or pull some out to pay off some debts. You could then be lowering your overall monthly obligations. I've had a lot of clients that are asking, when rates get a little bit lower, they want to do some refinancing because then number one, they want to refinance their current mortgage from the 7.5% or whatever it is, maybe down to like a 5 or something like that. And then, but they're also going to be paying off some credit card debts and some things that they've, ran up during, this up and down market that we have. You can't do that if you're renting, you know what I mean? So this is why it's another big idea and, just benefit for people to have home ownership and understand their financial situation. Am I ready? This is what I love helping clients with, is going over to see what their current financial situation is like. What are they used to, paying each month in rent? Are they paying, are they comfortable paying? Can they afford a $1,000 a month payment, a $1,200 a month payment, on top of, car payment or student loans or installment loans, those kinds of things. I go over and analyze all that stuff with them to be like, okay, here's where you're at as far as what you're bringing home each month. And here's your payment. Do you feel like you're going to be comfortable paying this? Because that'll really help dictate then where their purchase price range should be. I know a lot of my clients, that I've worked with, can be pre-approved from a lot more than they actually want to spend. You know what I mean? So it's just nice understanding, your financial situation when it comes to, purchasing a property or even renting for that matter, and understanding the pros and cons of both and when you're going to be ready. Because at the end of the day, even though you may have certain things to fix at the home, or you have to maintenance, lawn care, those kinds of things, you are still going to be benefiting so much more because you have ownership and you're also building equity during all of this time. Renting, you never do. That's just, you're just giving that money up, and it's really not, there's really nothing more to show for it except, okay, yeah, I have a place to live. So good information in those regards. And so as far as like property values, home ownership is touted as a way to build wealth. Like any investment and any other investment, certain factors could positively or negatively affect the value of your home, including economic issues, which is what we're dealing with right now, that the unique market, maintenance, environmental concerns, nearby landfills, those kinds of things. These are just the real things that I wanted to go over just to make sure that everybody knew still, depending upon where you're at. Exterior conditions, nobody can choose your neighbors, those kinds of things. Okay. But I know some of the positive things is that, the tax benefits, because you do have the ability to write off, your interest that you pay each year. So your taxes, I know initially when you purchase a property, you can write off your cost too. Like if you have clients that have paid points, whatever their closing costs are, you can still write those kinds of things off as a tax benefit. So those kinds of things are just really, really good and can totally, be a beneficial, element for you. And so let me scroll down. Where's the other part that I wanted to kind of discuss? All right. Before we get into, some of my flyers here, we'll talk about those. This was just some extra. Okay. Here we go. Okay. All right. So is renting cheaper than owning a home? Renting can be very predictable expense. You know what your costs are up front and can plan accordingly. On the other hand, you will enjoy a lavish lifestyle. You may be renting to be more expensive than owning a home, even if there are repairs, regular maintenance you have to make, but you're also doing it for somebody else. So home ownership is a good investment. Buying a home can be a very good investment. You will be able to build equity, build as in any investment just as well. Investment performs demands on a number of factors. So when a strong economy, like, we're starting to get to, I should say, not a fully, but we're in the right direction. Those kinds of things can help with home equity. I mean, we have a property down in North Myrtle Beach that we purchased back in, I think it was 2013 is when I think we got it. And we got it for like a really, really good price. It was just one of those kinds of deals. And we wanted to have something for all of the family to enjoy, not even use as a rental, all those kinds of things. This particular property is worth double now what we paid for it, and so those kinds of things you cannot get without having home ownership. So good information. All right. So any questions or all? Do you have any questions or anything like that yet? To go?
No.
Okay. All right. Perfect. All right. Brianna, if you have any questions, feel free to unmute and stop me. And if you need anything to go over. All right. So let's start with this one. All right. So here is a good breakdown and a good recap of what I wanted to kind of discuss here today too, between rent or buy, and it pays to do both, and here's why. Okay. All right. So renting is a great way to set yourself up for home ownership because it does give you a little bit of flexibility. Renting gives you time to save for a bigger down payment to make sure you're ready for the long-term commitment. Credit score, paying your bills on time improves your credit and increases your chances of being approved, for a mortgage. Job security, renting until you become established in your career. This is a good topic because, more now than I've seen is job changes for people. They're either, changing jobs in their field, or they're getting out of their current field and going into another one. Or they're, just, getting creative and spontaneous and starting their own business and those kinds of things. That's where we come in and educate them as well. Also, because if you're going to go through a job change, for example, you've been a W-2 employee your whole life, but you're like, you know what? I want to work for myself. I want to try to grow my own business and see what I can do to change myself and further my career and how they want to do things. So when it comes to that and they become self-employed, it basically restarts your clock, because most lenders they want to look at least a 2-year history of your income to basically see what you are claiming you're making from your business. So that's what I like to see, like a 2-year average. I mean, in some cases, depending upon down payment, reserves, they may take 1 year, but I mean, you have to have those other compensating factors in play in order to take it through the conventional or, the standard, standard types of financing. So that's a really good way too. Like if you're, hey, you decided you wanted to change jobs and open up your own business, if you needed to rent for a couple of years to kind of, make up enough money and show how much you're making off of your tax returns to qualify for what you do want, that could be a good thing to possibly do if you don't already have a home. And then stable income, reaching a steadily increased salary level when renting can positively impact how lenders perceive your ability to repay a home loan. That's another good topic, is not just the stability income, but, showing good rent payments and things like that on time. In some cases, if the credit score isn't as strong, your rent payment each month can be a great factor and a good indicator to show that, okay, this person, seems to pay their rent on time every month. That's a good platform and a good, basically, setup for, okay, maybe they should do the same with a mortgage. We got to give them the benefit of the doubt, and this could maybe help them with their qualifications. Okay. All right. Now, when it comes to buying a home, it's totally worth it. So predictability. So with a fixed mortgage rate, you'll know what your payment towards the principal balance will be for the life of the loan. Okay. Building equity. Many homes increase in value. I know we touched on that briefly. Many homes increase in value as the mortgage debt goes down, which adds to the amount of equity and your personal net wealth. Tax benefits, like we touched on. If you itemize your deductions and your income taxes, you can deduct the mortgage interest and property taxes you paid. And then ownership. When your mortgage is paid off, you can then take pride in the fact that you own your home outright, and you're honored your financial obligation. So just good information in regards to that. Okay. All right. So this other little bit I wanted to kind of talk about, especially in this market that we're at right now. So as rent prices rise, fixed rate mortgages don't. So renting can be expensive, especially when you're each renewing your lease. So, but with a fixed rate mortgage, you know what you're paying from 1 year to the next, and then you could possibly even refinance when rates do drop. So going from renter to homeowner doesn't have to be complicated. We offer home buying solutions that allow low down payment options, imperfect credit. Purchasing a home and achieving your financial goals is easier than you possibly would think. And this is what I try to do with every client, because I know it is scary going over everybody's financials, and, it can get personal with some things, because we're just trying to help. We just really want to make sure that we're helping them. We keep everything private. We don't talk about anybody's information or situation with anybody. This is just all about, knowing that you're ready to do it and what the pros and cons are to help with your timing of when you're ready. So this is exactly what we do, is we just take the time to kind of go over the situation, make sure that we're understanding what they want and what they can do initially to buy it. Okay. All right. And then just some kind of, sample rent payments and some things I wanted to show on here. So home ownership is an investment into your own future. Your property value may increase over time. You can design and customize your own home, to your taste, which is nice. Remodeling may also increase your home's value. I've been doing a lot of renovation loans lately as well too, which has been great that we offer. Renovation loans can be, because some of the properties that are available now they're not all move-in ready, turnkey type of places. So, but what's nice about renovation loans is that you can purchase a property and then put your own, designs and what you want to do, your own upgrades and changes to it. It's what's really good, and make it your home. So we love going over all those kinds of details and things like that as well. But here is just an idea of what sample rent payments can be, over how long you're paying somebody else's rent. So say, for instance, if it was a $1,200 a month rent payment. So in 5 years, you've paid $72,000. Okay, over 10 years, 144,000, 15 years, 216,000. Right now, from what I'm hearing, rents are more around the $1,800 to $2,000 range, it seems like. So just in 5 years, an $1,800 rent payment, you've paid that renter $108,000. It's unbelievable. 10 years, 216,000, and so forth. 15 years, 324,000. Once I think people really understand, the difference and what they could own with paying that, it really kind of, opens their eyes. Like, you know what? Let's see if we can do this. I don't necessarily need 20% down in order to buy a home. There's plenty of different options where if it's a cash thing, they could potentially qualify for some down payment assistance funds, depending upon what they're looking for and what they need and can qualify for. There's so many different types of things that we can do instead of, just, um, paying somebody else's rent over time. So this is just a really good thing that I wanted to kind of show and go over real quick, was just to give an idea of what rent payments are over like a certain amount of time, because a lot of people are just so baffled by these numbers when they've been renting for so long. I had a client that was renting for 24 years. 24 years that we literally just closed on them. I think it was 3 months ago. Finally bought a house. I'm like, oh my gosh. I was like, you alone probably paid off that house
Yeah.
for that particular, owner. And it's unbelievable. And it was all because they were really never taught. They were really never educated on what the process was. And they honestly didn't think they could do it. And it just broke my heart, just listening to their situation and going over those kind of details, that I'm like, look here, I just wish somebody would have came into their life sooner to kind of help kind of talk them through that. That's why I'm so big. And not just these classes, I may just start going back and teaching classes at some of these high schools or early college, something like that, just so people have an understanding of what their options are. It's not going to be over your head. If you plan accordingly and you work hard and you get things set up, anybody should have the opportunity to be a homeowner. So lots and lots of good stuff and good information. And it's really all about just learning where you're at financially, saving up a little bit, seeing what you can qualify for, if for down payment assistance, things like that. I know a lot of clients too, that have other means in regards to investments or 401ks, things like that. Those are the types of things that purchasing a property where you're going to at least get that money in return, get it back, could be a great thing to invest in. So, I mean, I've had multiple clients over the years pull, because they think, oh, I don't want to touch my retirement, yada. And I'm like, okay, well, let's look and see what the benefits are. You're using it to purchase a property. You're not just using it to go on vacation or go buy a car or go, just go buy stuff. You're actually putting it into something that you're going to be able to have equity one day and potentially get that money back. So those kinds of things, it's really all about education and everything more now than ever. It really has. So taking the time to make sure that people understand their situation is just vital. I think with cross country across the board, this is just what we do. And we really want to make sure that people understand fully where every penny is going to. So towards their payments and towards, if it's a consolidation, if it's just a rate and term, if it's a temporary payment that they know they can make, and they know they're going to refinance to get themselves into a better situation, those kinds of things. So that's really probably the biggest benefit, is just knowing that if the rates are where they are right now, we know that eventually that's going to be able to come down when we refi. So just to kind of touch on that again, it's just a good information, good tool. And I have all these forms, and I can email you these too. Like if you ever wanted to send them to clients, I have these in PDF form to send you to. So everybody on Zoom, I can send you emails. Just text me or shoot me over your email address that you prefer to use. If it's your KW one, that's fine too. I can just look that up, but let me know, and then I can get you some of these. And it's just really good information to kind of know and to have, depending upon what your clients are looking for. So anything that we can do to help grow your business and get more buyers and more sellers to be comfortable with either buying or selling, this is what we're here to do, and this is what I want to do for you. And so, but any questions? I know there was a lot. I was trying to fit it all within like 30 minutes, just so we had a little bit of time just in case we could discuss any scenarios or anything like that. But great information. So, okay, all right, good. Yeah, hopefully it was, you learned at least a little bit, and
Yes. Yeah.
Okay, all right. So Brianna, any questions, for you at all? Anything I can go over or touch base with you? I know I cut it a little bit shorter today. I didn't want to totally overload with all the information, but any questions or anything you'd like to go over, scenarios?
Nope, no questions.
Oop, if you're speaking, I can't hear you.
Hello?
Let's make sure. That's all right. No problem. If you do have any questions or anything like that, just give me a call and just buzz me. I'd be more than happy to answer any question that you have. There we go. Okay, great. Okay. All right. Well, thanks for joining in today. I appreciate it. And like I said, I'm always here to help. If you need anything at all, give me a call and we'll get you all squared away.